Thank you very much for your patience. It is the scheduled time, so we would now like to begin NYK Research Group's analysis presentation regarding the maritime demand situation. Today's MC this is Okada. I am the head of the IR group of NYK. I'll be serving as your MC today. Now, first of all, I would like to introduce the speakers for today's event. We have on the research group, General Manager Mr. Hayashi, Deputy General Manager Hara, and Manager of the research group, Mr. Oshimoto. For today, we will begin with a presentation from the company, followed by a Q&A session. The Q&A session for today, we will take in questions only via the QA chat. So you can raise your question during the presentation as well, if you wish to do so. I will read the question anonymously, and the speakers will address the questions. The materials to be used for today's session is already sent to you via email, so please refer to them as adequate. And please be advised that today's presentation will be posted for on-demand distribution later, including the Q&A session. This is the quiet period before the third quarter results announcement, so we cannot talk anything about the third quarter results, so please be advised of that restriction. And today's session was analyzed based on the mid to long-term supply and demand situation of the market based on the research team using the materials available generally. So this is not an opportunity for us to discuss the strategic direction of the company. As for today's agenda, Mr. Oshimoto will first begin with the car carrier market situation, supply and demand situation, for about 15 minutes. And then after that, Mr. Hara will present the container vessel market conditions for about 20 minutes. And then finally, although this was not included in the agenda, the shipbuilding situation will be explained by Mr. Hayashi because this is a hot topic recently. So he will spend about 15 minutes for that. So altogether from the company, there will be a 15-minute presentation from the company. And the event itself will last for 1 hour and 50 minutes, which is a little bit longer compared to usual IR events. But we'll be delighted if you can stay until the end. So without further ado, we would like to move on to the presentation. Mr. Oshimoto, please, the floor is yours. I am Oshimoto from the research group of NYK. Thank you very much for your time this afternoon. For myself, I would like to talk about the car carrier situation, talking about the new car sales and also the container, movement as well. The first, regarding the car sales situation, let me talk about the historical trends. The car sales globally, although there was a temporary decline after the financial crisis in 2008, in the early 2010s, the market in China grew rapidly, and we have seen a constant growth globally. In 2015, the first Trump administration was established. With the U.S.-China trade friction, the sales started to decline, and there was a steep decline in 2020 due to COVID. The recovery was slow due to the shortage of semiconductors, so it remained sluggish up to 2022. But then in 2023, it recovered to the pre-COVID level at last, and ever since we have seen an increasing trend. In 2025, due to the Trump tariff, there was a confusion that was expected, but actually in the main markets, the sales was higher than the previous fiscal year, and therefore we expect to see a slight increase of less than 5% in 2025 compared to 2024. 2025 was the year that we were at the mercy of the Trump policy. In April of 2025, a 25% additional tariff was imposed to the cars exported from Japan. So temporarily there was an increase of tariff from 2.5% previously to 27.5%. So America, which accounted for 30% of the total exports from Japan, there was a steep concern that the exports will see a steep decline. If you can look at the left-hand side, these are the car exports from Japan to the United States, and the curve shows the unit price per unit. And this was calculated by dividing a total number of amount by the total number of cars. In the Biden administration, the car sales was quite active, but after hitting 29,000 units, the unit price has come down significantly after the Biden administration changed. On the other hand, the number of cars exported to the United States has not changed significantly even after the Trump tariff was introduced, because the stable supply to the market was given the highest priority. Then on the right-hand side, this is the Inflation Reduction Act. In September 2025, this was terminated. As a result of that, the battery EV tax credit was terminated and abolished. And therefore, for consumers, the BEV after October, the prices were raised on the part of the consumers after October. Instead of the BEVs, hybrid cars became more popular. Tesla market share from 5.5% in September has come down significantly to 3.1% in October. On the other hand, Toyota market share increased from 13.4% to 16.3%. In the hybrid market, Toyota already accounts for more than 50% market share, and at this point of time, there was a major shift of popularity from BEV to HEV. And also the gap between Toyota and GM, the highest market share, has shrunk to 0.5 percentage point only in November. And Japanese makers' market share increased, and there is a possibility that this will have a positive impact to the Japanese manufacturers' exports to the United States. And the other important factor regarding the car market, this is not limited to 2024, 2025. This is a recent trend, and the actual export from China has been increasing of late. Up until 2021, the exports from China was less than 1 million units per annum, but after 2021, this has been increasing by 1 million each year, and it has grown to over 7 million units in the year 2025. After 2022, with the recovery from the COVID, the EV trend has become popular around the world, and the Chinese manufacturers got onto this trend, and therefore the EV exports has been increasing from China. And also in the Chinese market, the economic conditions deteriorated, led by the real estate market, and therefore the Chinese manufacturers have engaged in the price competition in order to take market share. Although the government tried to stabilize the situation, it was only in July, so therefore the effects were limited. The right-hand side shows the unit price of exported cars from China, because in July 23 is about the middle there, and that coincides with the timing when the unit price has started to come down. After that, the Chinese government tried to stabilize the situations and calm down this excessive competition, but the effects are limited. Therefore, the unit price of exports has also been coming down. Last year, when I visited China China is a planned economy, and therefore what is distinctive about that is that regardless of the changes in demand, they try to produce the actual volume that was planned in the beginning of the year. Therefore, this resulted in excessive production, and new cars were not sold completely in the domestic market, and many vehicles were then used for exports. Now I would like to talk about the number of units exported. This is the number of exports per region based on maritime transportation, has remained flattish until 2020. But then with COVID-19 in 2020, there was a temporary reduction, and therefore the growth recovery was modest due to the shortage of semiconductors, but it started to increase constantly from 2021 onwards. The gray part shows the exports from Asia. Before COVID, Japan and Korea accounted for the bulk of the exports from Asia before COVID. But in the recovery from COVID, the exports from China started to increase sharply. So the East Asia accounts for a significant portion of the exports from Asia, including Japan, China, and Korea. And the curve here shows the export percentage. Previously, it accounted for only 55% or so, but after 2021, in line with the exports from China increasing, the proportion of exports from China increased significantly, and the export ratio has exceeded more than 65% in the year 2025. And it's expected the export ratio will continue to grow from East Asia. With the Asia exports increasing, there will be a wider gap between exports and imports, and therefore the demand for ships may become much tighter compared to before. With the increase of exports increasing, but the imports, on the other hand, has not changed significantly over the last several years. The left-hand side shows the exports divided by the number of imports from Asia. Previously, it was only about 3 times difference, but with the increase of exports from China increasing, the gap has widened, and therefore the times of difference has increased to 5 times in the year 2025. And in 2026, this will remain unchanged at about 6 times in 2026 as well. If you look at the right-hand side, this shows the transport distance by one carrier per unit. The distance has been increasing from recently, and this was partly due to the exports from China increasing, and therefore, and also the skewed import and exports from Asia is one factor behind this. And also, China exports was mainly destined to long distances such as Europe. And also, from 2023 to 2024, because the Suez Canal was not able to pass, and therefore the Cape of Good Hope route was used, and therefore the transport distance per unit has increased significantly. China exports will now build factories in the areas close to destinations, and therefore cars will be supplied from there, and also the Suez Canal will be reopened. So because of that, the distance per one unit is likely to come down in the future. But as you can see from this graph here, in 2027, even though the distance becomes shorter, still it is relatively higher compared to the historical levels. Now, I would like to talk about the supply of ship capacity. If you look at the left-hand side, this is the number of car carriers. In 2025, it has increased to more than 800, and this is likely to reach 2,900 units. The exports from China is now trying to be caught up by the new vessels, but the new vessels was 85 units in 2025. That was the peak, and as for the new contracts for ships was only 6 units, and therefore the new orders for new ships has already finished. The middle one shows the order backlog and the completed ships. The curve shows the completed ships. This exceeded 70 units in 2024, but has started to decline ever since. Also, if you look at the bar charts in the middle graph, the order backlog was more than 200 in the past, but the order backlog is going to come down steeply from 2025 onwards, and it is likely to come down to only about 50 units. So we are expecting to see a steep decline in the number of new ships going forward. And also, the charter fee, it has already peaked out, but even so, compared to before, it's still at a higher level compared to historical levels. But in the car transport, the charter fee will not be a big factor, so the charter fee is only for your reference here. the 2025 car carriers are coming close to 900 units in 2025, but the age of them is already 15 years old, which is the highest level in history. So those car carriers are becoming older rapidly. More than 100 units were scrapped after the Lehman shock. So at that point, the average age was 10 years old. If you look at the middle one, those are in 2012, those are less than 10 years of age accounted for more than half. But then in 2026, the average age of the vessels have become 15 years old. If you look at the left-hand side, in 2024, there has been an increase of, it has become 1.5 years younger compared to 2024. This was due to the fact that more than 70 ships were completed after 2024. Currently, if you look at the far right side, you see that less than 5 years old vessels account for 16% of the total. Those were the recently completed ones. More than 100 ships are expected to be completed in the near future, so the average age will come down in the future. However, if you look at the bottom left, the dismantled ships, after 2024, there are no dismantled ships expected, so therefore those old ships will continue to be active in 2025 and onwards. So more than 16 years old, accounting for more than 60%, is a very unusual situation. The car carriers has become quite in need after COVID-19, so all these old ships will continue to have to be used. If there's any extra capacity in the ship, there are very old ships still remaining, so the extra capacity becoming available is very unlikely in the future because of the need for dismantling these old ships. Now I'd like to talk about the factors that could affect the demand and supply of the ships, vessels. Those factors that could lessen demand would be the reopening of the Suez Canal. In 2023-2024, the transport distance increased significantly per unit. That was because of the Cape of Good Hope route, accounting for 6 to 70% of the total distance. Even if Suez Canal passage is reopened, this increase will come back to the previous level. And the other one is the order backlog of 150 ships. This will increase the transport capacity significantly when this is completed. 100 new ships will be completed in 2026 and 2027. With this new addition, by the end of 2027, there will be more than 1,000 ships available globally. The third factor is the production shift inside the region in EU and also the Americas, because they are wary about the increase of exports from China. In order to protect the automobile industry in each region, there might be a shift in the intra-region production. And also, factories are now being built in the areas close to the consumption place, so this could have an impact on the transport distance. And also, with the increase of tariff by the United States, this could dampen the demand. On the other hand, if you look at the right-hand side, these are factors that could tighten the demand. The exports from China was continuing to expand, and also the exports and imports from Asia is still continue to be in balance. Therefore, the export distance per unit will continue to be long. And also, recently, with the increase of China exports, there are exports that could not be exported by the car carriers. Instead, they have been using container carriers. So, but these will be shifted to car carriers in the future. And also the construction rush of the new vessels, it will complete and finish. And also the slow steaming may become necessary due to regulations, and that may take longer days for reaching the destination. And also, all those old ships may be dismantled if there's any impact on the transport capacity decreasing. So with this, we believe that the supply-demand situation for automotive will continue to be tight. However, due to the tariff and subsidy policies and also the political situation around the Suez Canal and other Middle East regions. Those are the factors that could potentially affect the demand. So we have to keep an eye on these trends going forward. That was about the supply-demand situation regarding the car carriers.
And let me talk about the business environment for container ships. And today, this is what I want to cover. So the situation surrounding container ships. I want to talk about what's a summary of the current situation. And based on the information, I want to talk about how we should view 2026. So that's what I want to share today with you. And first of all, please take a look at this, the international situation and maritime transport. So the change in the international situation will be affecting the transport, maritime transport, logistically and also commercially. The Middle East situation is affected a lot. And also, there's not been attacks by the Houthi for over 100 days. And then September 29th of last year was the last day of the attack. But depending on the change in the situation, there is a potential resumption of the attack. And so the Gaza situation, ceasefire has come to the second phase. So we want to be closely watching how it turns out. And the number of vessels going through the Suez Canal has been changing from the end of the year. So BIMCO shared a report in December 2025. The number of vessels passing the canal compared before the detour happened, the number of vessels have decreased by 60%. But right after that announcement in 2026, on early January, the number of container ships actually increased to go through Suez Canal. And that was recently announced by Drury. So that's a change we're seeing. In the Panama Canal, the number of vessels operating is on the recovery. A year ago, President Trump was talking about regaining Panama Canal. So he mentioned that. But right now, so the Panama is rebuilding the relationship with the U.S. So the president has also made an announcement at the beginning of the year that Panama Canal remains with Panama. So we need to be also closely paying attention to the situation. We'll continue to collect information about this. And regarding Suez Canal, regarding the passage of Suez Canal, so how the shippers are handling. So I made a list of different actions. The first, CMA CGM. So the detour started to the Cape of Good Hope, and they're coming back to Suez Canal. So various European countries are supporting this naval vessel aspect as operation. So they have been escorting the vessels to connect Asia and Mediterranean. And so they started to going through the Suez Canal after that. Then after that, going to the Red Sea. And this year, they are connecting India over to US on the East Coast. So they restarted the use of Suez Canal. And for the route connecting Asia to Europe, so 23,000 TEU type of such large ships has actually started to use Suez Canal for Asia route. So these are the largest ships that we are seeing right now going through Suez Canal. And MSC, the largest player in the world. And so they have resumed. There's a report talking about they resumed the Suez Canal route, but we don't have any information of detail of which route or which vessel is going through. So we are still confirming the details. The major action was seen with Maersk, connecting Indian to U.S. East Coast, and so they started to use Suez Canal. That was from the last Thursday when they made the announcement about the resumption. OOCL connecting from Asia to Europe, and they started to use Suez Canal, and this is expected to continue. ONE, so RCL from Thailand, and are connecting from Asia to Red Sea. And they are not going through the Suez Canal, but Bermuda Strait is utilized. And they have started to charter this lot, but they haven't really started to use the vessel, just like Evergreen. And they're using RCL service to resume their service. And the Hapag-Lloyd at the very end, So they try to resume the canal Suez to connect India to U.S. Southeast coast. However, they received objection from a major shipper, so they withdrew from the idea of resumption. So each player is taking different actions right now. So regarding Suez Canal resumption of use, what happens if the reopening of Suez Canal happens? And the judgment. What would be the judging factors to allow that to happen? So ceasefire agreement, with certain stakeholders, depending on the level of ceasefire, and the cruise, cargo, vessel safety, and the understanding of stakeholders like shippers. Those would be the key factors to make a final judgment. And based on that, once Suez Canal is reopened for passage, when that happens, then many different stakeholders will expect to see a shorter transporting distance, and that should create some available vessel that can actually cause the looseness in supply demand in vessels. And that's been mentioned. But I want to talk about in 3 stages. So right after reopening, also their transition period, and then after the transition period, once operation is stabilized. So those are the 3 periods we need to look at. So this transition period, how long it's going to take, has been also mentioned by different stakeholders. And Hapag-Lloyd, the CEO, Mr. Jansen, is talking about 60 to 90 days as a transition period. And also the research company for maritime sector, Senator Peter Sand, is talking about 3 to 5 months. So during this period, they will rebuild the logistic network and route network and alleviation in congestion in ports and normalizing the vessel schedule. And that will be taking place during this transition period. But regarding the Suez Canal use, right after the reopening, we expect to see the confusion in our operation. Please take a look at the next slide. So what could be the potential factors to cause a confusion? So now we have vessels detouring, going around the Cape of Good Hope, which actually left much earlier, departed much earlier. But the vessels that go through the canal can actually reach the destination earlier to European ports, and that could happen, and that causes a congestion. So at those ports, there's a concentrated amount of cargo arriving at the ports. If the ports can handle them in a short period of time, there will be no congestion. But looking at the current European container terminal, they see continuous congestion since 2025. And also in this January, because of the impact of the container, so they see further congestion taking place. So if we see the reopening of Suez Canal, that can increase the cargo volume for temporarily to cause further congestion. So container terminal, the on-ground inbound transportation and logistic warehouses. Once containers are received on the European continent, and the flow of container, so there is also shortage of space for storing those containers, and also on-ground transportation would not be able to maybe address and accommodate such a sharp increase in our transportation volume, cargo volume, and logistics warehouses has also concern about the potential space, and so there could be a potential delay in receiving containers, and there's not enough space at the warehouses. Then containers themselves could be utilized as a warehouse. And that actually lowers the turnover rate. In Europe, if the vessel would be dropping by multiple ports, so if after a certain port, then that will cause another delay in the next port, and that will actually have an impact on the other vessels. And if the container coming from Europe or with the cargo, when they're arriving in Asia, there is a potential pressure on the space as well. Under the COVID, we had the issue of the logistics, and that became quite serious. So we need to look back what happened and during that period, and we can assume what could potentially happen in the future now. In 2026, so I want to talk about what the best case could be. And on the right-hand side, we are showing line chart. So the increase of vessel capacity is dark blue. The green is the vessel demand increase and TEU miles using Clarkson data. The light green number line is the increase in the cargo volume. So the 25, the increase rate of cargo volume was 2.5%. The canal Suez Canal passage was going to be started from the end of 26. So TEU mile increase is expected to be negative 0.6%, and also the fleet in capacity increase is expected to be 3.1% according to our investigation group. So as you can see, these numbers, the increase in the fleet capacity and also cargo volume and demand. So fleet capacity is actually increases much more than the cargo volume and the demand. So based on this demand situation, so what will be the prices? What happened to the prices at the beginning of this year? So as of 16th of January, the last Friday, this was the number announced the second time for this year. So we're showing composite freight index numbers. So 1,574 point. So it went down by 4.45%. And so it went down for Northern Europe and Mediterranean. The U.S. market went down on the West Coast, but East Coast is maintained at with the increase. And so that decided the market condition.
So now what is going to happen with the container volume? In 2026 overall, the container increase, Clarkson is expecting a 2.5% increase. However, if you look at 2025, in retrospect, the 2.5% projection, in principle, means this is a deceleration. So if you look at the cumulative number up to November, there's still a gap between that number. If you look at the right-hand side, if you look at the curves on the right-hand side, the red one shows the 2026 number. November, 16.45 TU, so 7.2% increase compared to the previous month. On a cumulative number from January to November, it's a 4.9% increase. So up to November, it has been achieving a year-on-year increase. After the Trump tariff was announced last year, nobody expected this would happen. This 4.9% increase, actually, maybe this is too early to talk about this, but the 2025 economic growth rate was estimated to be 3.2% by various institutions. So this cargo container increase is much higher compared to the economic growth rate. Back in 2008, when we had a financial crisis, after that, the economic growth rate, slow trade happened. The economic growth rate was higher than the cargo trade increase. But now in 2025, we have seen this transition from the slow trade already. That is what is explained by this data. So why this slow trade has already finished? There are many factors behind this, I believe. Of course, we have not been able to analyze everything. However, for example, the container movement volume from emerging markets is increasing. In Europe, there's a stronger preference to cheap Chinese imports products. On the other hand, there is the trade ratio inside the intra-region of Europe is now coming down. That is what we are seeing here. Now, if you look at the cargo volume by the trade routes, if you look at this matrix here, from January to November cumulative, how to read this, the vertical one shows the destination, the port where has been departed, and also the loading port, and also the right hand, the horizontal axis shows the destination, and you see the year-on-year increase for all these routes. The highlighted portion shows the areas where there was a remarkable change, decrease and increase. Different colors are used. If you look at the bullet point number 2, a decrease was witnessed in North America, US, Canada, and Mexico. This was an area of decrease, but on the other hand, in intra-Asia and Asia to Europe, Asia to India, Middle East and Latin America and Africa, those have been showing increase. In Africa, 26.3% increase. A significant increase was witnessed for Africa. And from India and Asian continent to, and also Middle East, departing low cargo has also shown a significant increase. Number 2 here, if you look at this vertical column of marked with number 2, from Asia to North America, there was a decline. However, from Europe to North America, and also from India to Middle East to other regions, there has been an increase. So from China to North America, there was a decline. However, other than that, in most of the other regions, there has been an increase in container volume. That is what we have seen from 2025, January to November statistics. And the next slide shows what is the simplified version of this. From China to Americas, we have tried to simplify things. So China, America, and the other markets are just taken here as an example. There's a decrease between the China-US trade, but otherwise there has been an increase in all other regions. Then what can we expect from 2026 based on this number? What do we have to focus on? We have set one question here. China's One Belt, One Road policy and the car container to other new emerging markets, will that continue to be showing a high growth rate? And the import purchasing power of the emerging markets, will that be retained? Actually, the Supreme Court decision on the tariff is still pending, but when will the export from China to US will start to increase again? Those are the things that we have to keep an eye on. We would like to collect information on these matters going forward. As we continue to collect information, the US-China situation has changed over the year-end period and the beginning of the year this year. If you look at the left-hand side, those are the factors that we have seen in US from November to January, and also the things that happened in China on the right-hand side. The tariff increase was not decided to happen, and therefore, as a result of that, the America's stance to China softened. How this will impact the trade is something we have to keep an eye on. For China, they are anticipating to expand trade with the One Belt, One Road countries, and of course, the trade war will continue. So there's no change in China's stance in that regard. So these are the things that we have to keep a close eye on this year. Just a little change of topic. What was the vessel situation in the beginning of the year? I was quite keen to know this, so I visited the port of Tokyo to see the vessel visited here. This is ONE Hanover. This is a vessel that is connecting Europe, Japan, and North America route in a pendulum. And the left-hand side shows the picture that we have taken from the PR office of our Rinkai office, and the other picture from OMI side. And if you look at the picture, you'll be able to see that the containers are loaded all the way to the highest level on the bridge, around the bridge. And in the other areas, the container loading is still limited, but you can see that crane is still working on this. The arm is lowered, so this is as of the 18th of, this is as of the 17th, so they used the remaining period to continue loading up to the departure time. So I think it was nearly full when they departed. So this, we are always curious about the container ship trends, but how fully loaded this is will show the container volume in a visual manner. So that's the reason why we prepared this slide. Maybe utilization rate may not be 100%. We expect to be 100%, but we can surely see that this has already risen to more than 90% level. Now, as for the container movement volume to the United States, how and when will this change? We have tried to focus on that matter. If you look at this slide here, this shows the announcement by the Retail Association of the United States and also the Department of Commerce a number regarding the retail sales. The blue part shows the inventory ratio. The inventory ratio is coming down compared to last year due to front loading this year and last year. March and April loads have seen some increase because of front loading, but despite that, the inventory ratio is now coming down. The year-end sales season, there has been an increase of 3.5% in retail volume. And as for the number of November, there was a 0.6 percentage point increase compared to the prior month. For October, the inventory ratio for versus the retail sales was 1.29. So there has been a 0.01 percentage point increase compared to the previous month. So looking at these data, the inventory will deplete. So we are expecting that the replenishment will start to pick up shortly. So in addition to this inventory level, because the midterm election is expected this year, so many new economic measures has been announced. And this today, as we speak today, the Supreme Court decision may come out at the earliest today. If that is deemed to be illegal, then there is some shippers are going to resume their exports from China to Japan to the United States, and maybe a new tariff may be introduced instead. So we have to keep an eye on those things. So from the year-end period, they have the Americas have announced new policies such as the acquisition of housings and so forth. So we have to keep an eye on these trends.
And so lastly, in the summary page. So the base case scenario is basically expecting a much bigger increase in the capacity over the demand. But as I can see, these are the possibility of seeing a loosened supply-demand situation, or it could be a tightened supply-demand possibility. As you can see on this slide, with the resumption of Suez Canal, depending on when it happens, under which condition, also Ukraine situation, how they turn out, and the U.S. policy impact will be affecting the potentials. Also, the export-import cargo from China, whether it's increasing or decreasing, will have an impact. So we'll be paying more attention to these situational changes. So we will continue to collect information. Thank you very much for your attention. Okay, next topic is about shipbuilding. Basically, we'll talk about overall shipbuilding since carrier and container ships vessels already mentioned, and the surrounding system, and that will be mentioned. So this is the amount of new shipbuilding volume, or the volume over different years. This is a deadweight ton basis. In 2025, the order for 2025 for new shipbuilding, this is still tentative number. It would be around 150 million tons. That's what's expected. And this number, last year, 200 million tons. And that was actually the highest since the shipping boom back in 2000 and in the year 2000. So it went down by a quarter by a quarter. However, since after the COVID. This is the second highest level following 24. And up until middle of last year, we weren't really seeing much growth in the amount of order. So we had a bit weaker forecast. But in October, there was a summit taking place between U.S. and China to have a one-year extension of port fee implementation. And that increased the sense of security and increased the order for new shipbuilding. And by different ship types, the bulk carriers and tankers, they went down to 2/3, basically went down by 1/3, but container ships increased. And so that is the difference from 2024 by different ships. And this is showing by different countries the order market share for new shipbuilding. As mentioned at the beginning, the market share by the China is increasing. And under COVID, China has been growing their market share in shipbuilding. In 2020, on a deadweight basis, again, this page is shown according to deadweight basis. And 70% of the global shipbuilding order have been taken by China. And so in 2025, there was a slight decline from that level, but still they are pretty much at 70% level. On the far right, on the left chart, on the far right bar was from last year. For the full year number, 2025. And that was broken down by month on the right-hand side. And as you can see, 2025, the red China share saw drops, huge drops in January and March. And that is due to under the Trump administration. And so, there was a potential, expectation for the counteraction for the shipbuilding measures taken by the Trump administration. However, actually, came back after that. Then, towards the end of the year, it's actually they've been increasing the market share to a much higher level. So that's what you can see from this chart. And so that is supported by also the ship prices. And during the maritime bubble back in the 2000, looking at the ship prices at the time, the 2000 was quite high in terms of prices. And then after that, there was a sharp decline after the bubble. So it went down on app, but now gradually it was going down. But during the COVID, there was a sharp increase in orders to actually bring out a surge in prices. And now that we are back at a very high level, and we were at the highest in 2024, pretty much the same level as we saw back in the maritime booming. And from the end of 24, it started to come down, and the pace of decline is still gradual. So it's pretty much comparable to the level that we saw back in this maritime bubble, the booming situation. And there are several reasons. One is, again, the amount of orders staying at a very high level. Also, the increasing cost for the labor supplies. And what we are seeing as those orders placed right now is actually accommodating the next generation fuel structure, so energy saving features. And so that is actually increasing the amount of orders and affecting the prices. And so the ship prices are staying at the high level right now, and that's actually causing not allowing the older vessels to be retiring, even though market's not strong. So when market goes down, the older ships will go out. However, the markets are still staying at the high level. Therefore, we see that's been sustaining the prices. And this is for different vessel types. And this is also the amount of capacity based on dead weight. And this is showing the amount of those vessels over 15 years old. For every vessel types, they are having very high percentage of those vessels with 15 years and older. So overall, we are seeing the more older vessels remaining in the market. And it's just bulk carriers and tankers. And those could be the potential candidate for future scrapping and replacement orders. And so scrapping, and again, this is also attracting a lot of attention right now. This is showing the global scrapping level in an absolute amount by yearly basis since the end of 20th century. As you can see, from 2022, the amount of scrapping Since the year 2005 or 2007, it has been actually staying at a very low level that we saw during the maritime boom from 2005 or 2007. And so, well, in the past, we did dismantle this match, so people might think it's okay to have certain increase in the amount of vessel, but that's not the case because there is a Hong Kong Convention. So from recycling yard, the contaminants coming from the yard must be prevented, and that convention is for that purpose, and that was enacted. And globally, people will have to be compliant with this convention. That's actually reducing the amount of recycling capacity, and there's two reasons. For lower the processing capability, because different country has a different level of being compliant with this Hong Kong Convention. And the global scrapyard are pretty much in 3 areas: India, Pakistan, Bangladesh. Those are the main area. Pretty much all the yards in India has been compliant with the Hong Kong Convention, but not so much with the Pakistan and Bangladesh. There's a big delay, and depends on how many more can be certified in the coming few years would be the key related to the capacity increase. Even with the yacht which are compliant with the convention, and now that they are compliant with the convention, it's taking much longer to recycle. Even with the same capacity, if they are compliant with the Hong Kong Convention, and then if they are taking the scrapping process according to the convention, their capacity has been lowered because it takes more. So those capacity in Pakistan and Bangladesh, we need to see a progress in their certification. Otherwise, we will see the bottleneck at sometime around 2027. In 2025, the scrapping capacity, if we can double the amount that we are able to do in 2025, unless we accomplish that level, it'd be difficult for us to accommodate all the potential need for the scrapping. So that is going to be the key factor, how much more scrapping can be accommodating in the coming capacity. And so, especially in Europe, there is a certain concentration of the vessel number in Europe, and there is a certain bias according to the situation only in Europe. Because European stakeholders, so the beach method recognized by Hong Kong Convention, they're quite reluctant in implementing this method. It would be they actually prefer EUSRR standard, which requires more difficulty over Hong Kong Convention and to be complied. If we use that as a standard, that will make it much more difficult to be compliant with the regulation, and then you can face that bottleneck maybe even before 2027. For especially these are not European people. And the bulk carriers, they can actually complete the business inside Asian market. And so they don't really have to get in touch with the European stakeholders. In that case, they will go for a BG method. And so depending on the standard being chosen, will also have an impact on the capacity for the recycling. And lastly here. And again, last year, this is what happened. And this was the actual discussion brought up last year. And there's U.S. maritime industry supply measures, especially port fee policy. So explain the background and what's expected to come. So why this policy came out in the first place under Trump administration. So basically, the policies are promoted by those, the politician who has an influence over the policies. And Walt's ex-president assist aid actually had an impact on the maritime promotion measures. However, he actually got rejected, kicked out from the Trump administration in May, and then so his team of NSC got downsized, and so there was a slowdown in this policy to move forward this maritime policy. So right now, the President Trump has no interest in trying to cause further attention with the China, and he himself may not have a strong interest in the maritime matters. He actually talked a lot because someone like Waltz brought the ideas for such promotion matters. So President Trump is unlikely to cause this issue once again to cause further tension with China. And China also took a counteraction, but it was just a counteraction to the action taken by the U.S. If U.S. does not resume this action once again, even though there is a conflict in other area with China, that China would not be using to counteract again unless U.S. takes these the U.S. brings this up again. And between Korea and Japan, there's been a talk between those two countries about the shipbuilding deals. But basically, U.S. has not been able to establish the institutional framework for making the right investment judgment. And it seems like they're just moving forward because Japan and South Korea will provide the funds when it comes to the investment related to this maritime matter. And so it seems like there will not be an immediate action related to be brought up by the U.S. government. So there is the dream of building ocean-going vessels in U.S. and Koreans have such a dream, and so they are talking about building such ocean-going vessels. But their main focus is going to be, in reality, it will be the naval vessels and the domestic vessels. Seems like that would be the main actions that can be expected in the States. And the capacity for ocean-going vessel, it's just still too early to discuss if there's a potential increase for such capacity. That is all from Hayashi. Thank you. Thank you very much for your explanation.
Okay, from here we would like to move on to the Q&A session. All right, so the first question. Let me begin the first question. The first question. This is about the car carrier. In the explanation, you mentioned that there's as a result of the share competition based on the discounted price in China that has led to increased exports. But recently, do you still believe that there is still extra production of cars in China? Well, thank you very much for the question. The car production capacity in China, if there's any extra capacity still in China. In 2025, the actual track record of production, 34.5 million units, approximately. As for the production capacity, according to our investigation, in 2024, 45 million units was the capacity back in 2024. However, after listening to various opinions from knowledgeable persons, some said 15.5 million, so there's a big gap of 10 million units there. So I'm not really sure if the Chinese statistics really accommodates all these actual units that is actually produced, but there's a 10 million at least extra capacity according to what we know. So if it's sure that there's a leeway of more than 10 million units. As to the size of 10 million units, the total demand in the world is about 90 million, so more than 10% of the total demand in China. If that is the extra capacity, extra production volume in China, that is a very significant volume because the total volume in Japan is only 5 million. So 2 countries worth of Japan is that extra volume already produced in China. So that you can imagine how big that is, I think.
Thank you. Next question. Regarding the container ships. So it's split into 2 questions. First, the current capacity for the scrap pool recycling yard and how much it different from the actual number of old vessels, and also scrap recycling yard. 80% of the market share is held by India, Pakistan, Bangladesh, such an emerging market yards. Many of them are not compliant with the Hong Kong Convention. Is that the right understanding? And the second question, the scrap yard, which are compliant with the Hong Kong Convention, how much capacity are there currently existing in the market? So let me answer the first question. So as I showed you on the slide, can you pull up the slide? This would be that slide. So your question was the current capacity and the number of older vessels and how much they are different. So as I mentioned, currently, so the recycling capacity, if that increases double the current capacity, then we will be out of the shortage in terms of capacity. So various vessels, based on the percentage of older vessels that currently we see, then we will see such a bottleneck to come sometime around 2027, assuming according to the current processing capacity. And regarding the second question, exactly as you mentioned, the majority of scrapping capability are in India, Pakistan, and Bangladesh. And the Indian yards are pretty much compliant with the Hong Kong Convention. And those in Pakistan and Bangladesh are still to be certified. And how much more are certified will actually affect to see whether we will see the bottleneck in 2027 or not.
Thank you. Now moving on to the next question. The next question is about the car carrier. In association with the tariff, the manufacturer's production sites being transferred to the United States, have you already seen that trend happening? Can you answer that question? Thank you very much for the question. Well, the production sites of manufacturers being transferred to the United States, if that is going to happen, that will be only the case when the new factories are built or utilizing the capacity that is already available. So the new factory construction, in such case, it will take like many years once the construction is started up to completion, and that the factory will have to see continued demand for decades. So given the Trump tariff situation, the question is about how they can respond to the demand based on the current capacity available, especially when it comes to the Japanese manufacturers. They are operating factories in the United States already, and all the manufacturers don't really have so much leeway in their capacity. That applies to most of the manufacturers. I cannot comment on the detailed name of the manufacturer, but in most cases, if they are going to transfer the production from Japan to the United States, I don't think that is going to happen in major scale, so it's going to be quite limited. So you may have concerns about the exports from Japan to the United States may reduce. I cannot rule out the possibility, but still I would say the impact will be quite limited, if any. Thank you.
Thank you very much. Next question. This is again about scrapping. So could you tell us about the conditions that need to proceed for the recycling? Looking back the past recycling, I think it looks like related to the business performance. If we were to see the performance weakening, and there seems like that increases the amount of recycling, and so that can actually lower the prices for recycling. What would be the other factors that we need to look at, the lower prices or the increased awareness towards the environment? And can you elaborate more on that? Thank you for your question. This is Hara speaking. Let me answer the question. And so whether recycling would be linked to the performance or not, exactly, it's linked. In the past, regarding the container ships, when we had a much larger recycling was back in 2016 and 2017. At the time, Hanshin shipper actually went bankrupt. So when the performance goes down, there are many vessels available against the amount of cargo volume, and so that was something unavoidable to cause such a recycling. So for now, we need to think about the complete resumption of Suez Canal would be one factor to have an impact. Also, since 2019 and until now, looking back those years, the replacement of vessels are not really moving forward under the COVID. So we needed more vessels because of the blockage of the logistics. And also in 2023, since December of 23, we started to see detour of the Cape of Good Hope. And that also increased the demand for the vessels. As I showed you, the TU miles, at the time we saw the increase of the capacity by 18% in 2024. So that actually preventing the replacement to take place. And for the amount of vessels over 16 years old, they're about of 9.64 million TEU as of August. So that is actually 30% of the total capacity are the older vessels at the end of August. So the replacement is not really progressing. And so along with the resumption of Suez Canal can be a major trigger point to start pushing further recycling.
Thank you. Thank you. Now moving on to the next question. The next question is about shipbuilding. The presence of each country in shipbuilding, you talked about the changes of presence. What about the possibility of emerging markets playing a bigger role, such as India? Yes, for India, yes, not only India, but China's market share in orders is increasing significantly. So if the maritime transport is controlled by a single country, that is going to be questionable. Many countries are now questioning this, especially countries like India. They have a shipbuilding capacity that is possible to build military ships in some cases. So they would like to utilize that infrastructure and build ships. I think that is going to happen. And I think some sort of options will be pursued by India. But again, the shipbuilding supply chain, we have to build a stable infrastructure, but that is going to take time, and it's going to be very difficult to make a cost-effective infrastructure. So India's shipbuilding industry or other markets, it's not going to take off immediately in a short period of time in a manner that will be cost-effective. I cannot guarantee that. But in those markets, there will be companies that will engage in businesses in these markets, such as the local players. So foreign companies providing services to those local companies may require shipbuilding by local players. In that way, that could affect the international maritime transport. That is how we view the situation.
Thank you. Next question. It is about IMO regulation. So last year, it was postponed. And the pressure from the US is expected to continue. Do you see such a possibility is high at this point? So it was also mentioned in NHK News yesterday. So pretty much all the UN resolutions are objected by the US, including diversity, climate changes, and all these resolutions will be objected by the US government, and that is the current administration's policy right now. So IMO under the UN, part of the UN institution, and so this climate change related matter issue, I think it's quite unlikely for the current US administration to be on board with this resolution. So even though the US will object to the idea, but how much strong opposition can be expected from the US is not sure. Whether they might actually, if there is a resolution, even with a sanction included, then if the US, if the other countries, how much threat they will feel in the fact that if the US counter back at those regulations, will have an impact on the future development. So after the interim election, and also if also it will depend on the how much busier they become with other policies, and of course they will maintain and to show their position at this point. But what kind of actions are expected to take place, and in other countries, what are they recognizing as actions taken by the U.S. government, still to be seen. Thank you.
All right, so the next question, I would like to move on to the next question, which is about the car carrier business. Exports from Asia is increasing. If that is the case, the distance per one unit is going to increase. Is that correct? That is the question. Thank you very much for the question. When the export ratio from Asia increases, the distance per one unit, whether that increases or not, that I think was the question. Well, what we focused in the presentation is that the exports from China is increasing significantly. So including China, the Asia exports increasing 1 million units per annum. Then there will be a skewed balance between exports and imports from Asia and to Asia. So when the fully loaded ships are going out from Asia, but then the imports to Asia is quite limited compared to the exports. So the car carriers coming back only have 10% loaded or half loaded. So compared to the distance that the ship traveled, the number of cars will be quite limited, and therefore the unit per one car, the distance per one car will be longer in such case. But then if the cargoes or the cars coming out from Asia increases, but the other factor is that the transport inside ASEAN countries is also growing. So it's departing from Asia, but also arriving in Asia. So from Vietnam to Thailand or Indonesia to Thailand, for example, it's a short distance travel. If that is the case, then the exports from Asia is increasing, but then the distance itself is shorter. So short distance transportation will increase in terms of the number of units. So that also has an impact to reduce the distance per one car. So the long distance from China, that will have an impact to prolong the distance. But if the intra-ASEAN countries traffic, it's going to have an impact to shorten the distance. So we cannot say something across the board, but you also have to consider the fact that the exports from China is significantly larger than before. So that has contributed to prolonging the distance.
Thank you very much. Next question. I think it's going to be the last question. So it's a question about container ships. So some of the shippers, why are they able to aggressively start using the Suez Canal? It's a very difficult question to answer. So the thinking behind the safety, there's a difference in understanding what safety for them among different players in the market, and going through the Red Sea and going through Suez Canal. Some shipper has an escort and some don't have escort. I think those are also differences. And also in Egypt, there are companies who are investing in the ports in Egypt. And also the company who has an MOU with the head of the Suez Canal operation. So there are so many different factors affecting the decisions by the shippers. So based on them, I think decisions were made by those different shippers. Thank you very much. So this is coming to the end of this session. So we want to close the Q&A session. Thank you very much for many questions. Thank you very much for your participation today. Thank you.